Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Friday, October 2nd, 2020. All right, let's talk about QQQ. Quick update there. We'll look at SPY. On QQQ, we've been dancing all day. Posted for at least since earlier this week. Preferred pullback target zone anywhere to that 272.40ish. That's a gap support right there. There's your gap. There's a reaction high, another gap there. So a pretty significant level, and that's my minimum pullback target, which I still maintain. I think it'll be hit soon, with potential to go down here to 268.20. So you can look at it this way: T1 or T2. And where you cover, it's up to you. If you want a quick pullback, assuming we even get there, you cover there. Otherwise, you can, if you hit that level, we'll probably get a reaction off it. You could then lower your stop. If you came into the day today short, or you took advantage of that bounce back. I did make an edit to that post I put out this morning right afterwards. In the first paragraph, I had stated a bounce back to 282.32, and in the next paragraph, I said with NQ, you want to short before that level, and we're close to it because sellers will often step in early, and that's exactly what happened today. So you can see, there's the resistance level. We got as high as 279.78, which is virtually, let's see, it's fraction of a percent. Actually doesn't even measure out there. Yeah, there it is, about 0.15, a tenth of a percent, 0.2 of a percent. So that's where if you expect a bounce there, and all eyes are looking right here, because again, it was to me a pretty big level all along, one of the most significant resistance levels I've seen in the market in a long time. So you had the seller step in early, so that gave you at least a nice entry if you missed a gap down this morning. And so far from high to low, not it's playing the game that you covered at the lows, but that was about a 2.3% drop. And again, where are we right now as I'm doing the video? 1, 2, 3 consecutive candle bodies right on that 274.91. That's that level. It's been on this chart for a while. Again, pretty significant level with gaps like I just showed you, and everything else. So that's it. What I need to say is that level needs to go, and it needs to go with conviction. We had a pretty nice move there, but look, it's a 60-minute chart, 60-minute candle, and they rallied back up to park it back above that level. Sometimes you get those intra-period breaks. So, I think if you take it out again, it'll probably go, and we'll open the door down to that minimum target there, 272.39. Anything much more than that, if they can, same story, if they can rally it back up and take out 280.32 with conviction, much above those recent highs. Remember, we got above there, we floundered around just marginally above that level, by a relative small margin, 0.8, less than 1% above that level, and then the divergence is played out. And yes, it was news driven, but so often, I've been doing this for years, and I point out that some corrections start purely on the technicals, but quite often, think of a trade setup. A bullish or bearish setup is it's like making a fire. When you before you light it, you put the tinder down, and then the kindling, and then you can put your logs on top of that, or wait till after they go. And so, by just throwing a bunch of tinder or kindling in a fire pit, it's not going to light. It's that match. So that's the match. It's the breakout there. And then sometimes it is news induced. It gets you going, gets the reversal, and then the breakout comes. And sometimes the breakout just happens. It's pure technical. So last night, the technicals align with the news, and that's it. We'll see what happens. I won't, I don't want to make too much comment on just because I'm battling COVID does not make me an expert, but I'll just say this: it's not good. Trump is not exactly a buff dude, and he's up there in age, so that doesn't bode well, especially with the elections coming up. But again, this disease is the weirdest thing. The symptoms range from absolutely nothing, where you don't even know you have it, all the way to death. Obviously, death isn't a symptom; it's an end result of secondary infections and things like that happen when it gets down your lungs. But my point being that who knows? That's one thing, and I can vouch for. I'm one of those people that never hardly ever gets sick, and when I do, I whip through it. And here I am, 5 weeks into this thing. So it's all over the board as far as symptoms go. So we'll see what happens, and the market will probably tune into that. As reports come through. Is he doing good? Is he doing better? Worse? But again, I go off technicals because I don't have a crystal ball. This is the closest thing I have to a crystal ball. But as far as news goes, who knows? Who knows what to expect? The headlines are going to come and go, and they're going to be bullish or bearish. So that's it. Enough talking there. Pullback target zone has not yet been hit, but we are holding on and dancing on that 274.91 support. It is a Friday. My guess, Friday, that news just came out today. I don't see a lot of people buying this thing up into the close, so I think they'll probably have a afternoon session dump, hopefully before you get the this video out. By the time you have time to listen to the video, and I think that minimum target there will be hit for today, and then we'll see what happens next week. And there's certainly the potential for more. I'm not going to go over the long-term charts now. I've been covering that quite a bit lately. I just want to go over the short-term charts and show you what's happening there. Moving on, NQ, NASDAQ 100 futures. Like I said, I'd say back and forth, game of bullish and bearish setups. You had that bearish divergent high, negative divergence back here that was a catalyst, and then the breakdown, of course. The divergence is not the sell signal. The match was lit right there. There was your catalyst, the technical breakdown. I don't believe it was news induced. It was just, a beautiful trend line. It broke, and you had a waterfall sell-off, and that kicked off everything that we just had. Biggest correction in months, many months. And that culminated with the divergent low, positive divergence, which has now given us, one of the sharpest rallies in weeks at least, and that's about 9% rally from low to high. It's still not anywhere near the where we were at the highs before, and just like QQQ, NQ stopped at what I consider to be a very significant resistance level with lots of reactions. Most importantly, all the reactions since the correction started, and with a slight, ever so slight overshoot. That to me is a failure right there at that resistance. We'll call it about 11,550 or so. And when we did it, it wasn't just a rally into significant resistance and followed by a failure. We did it with negative divergence. So there's certainly the potential for more, but the cross currents here, these are bigger divergences. We're coming off a much bigger divergence on the 60-minute chart. So yeah, I'm just open. I'm going to play it. I'm flexible. I think NQ is coming down. We'll probably park it somewhere here today, or who knows if we maybe starts out Sunday night when futures start trading again after they close today. But I think we'll still hit this 166.84 target. So that would give you, whatever percent or so more drop into that if that level's hit. I'm just kind of eyeballing it. And yeah, about 1%. That's what I figured. Oops, took the wrong trend line away. Got to put the other one back before I leave this chart. And I don't know where it was, somewhere in there, right around there. Yeah, reaction high, reaction low, and that's where we're dancing right now. And on SPY, the S&P 500 tracking ETF, it stalled out right there at that gap resistance. That line's at a 338.71, boom, with the divergent high, negative divergence, and pulled back almost, I guess almost close to perfect to that 331.18. And that was a pretty big support level. You can see it goes all the way back here. You had a gap right there, and then you traded on that level for a while, testing it from above successfully. We pulled back there and bounced off it. Then we broke it, and once we broke it, we rallied back up to back test it right there and failed with a gap down the next day. Ran up again, hit it, failed with a big drop. Finally took it out with a gap. That's bullish. It shows that it's a technically significant level. Back tested it, and then boom, that's what we hit today. So that for an active trader, if you're very active, that was an obvious place to cover. These lines were laid out in the the charts posted, covering the videos in the last week or so. But I'm leaning towards another thrust down, and I think we'll get it and backfill this gap right here, and that would take us down to 329.58. Again, as a minimum pullback target. It could certainly be more next week. But of course, it's Friday. Market tends to do that. Leaves everybody guessing. Swing traders, even if you trade futures, you got to go home and roll the dice with 2 extra days of overnight risk. So we'll see how that goes. So we're one way or another, we're going to gap up or down on Monday, or in the futures on Sunday night. And for the time being, I'd rather remain short. Nothing heavy. I wouldn't certainly go home heavily short or long into the weekend with everything that's going on. But I think that's what the risk reward favors right now. More downside, another leg down. This is ES, the S&P 500 futures. Probably should draw a line right about here. Reaction high, reaction highs, reaction lows there. So we bounced, we went down, I'm sorry, after the divergent high, just like NQ, negative divergence right there, catalyst for this drop, followed by a kickback rally into resistance. Here, I'll put the line up for you so you can see it if you're an ES trader. Right there, and again, I'm focusing on these previous reaction highs right here. There's quite a few along the chart, and so we bounce back to or very close to that level, and we'll probably take another jog down, and to where, again, a little bit below today's lows is what I'm looking for, at least minimum, and that would take us down there. So we'll call it about 32.90 or so, right there. Anything much more than that, by the way, I should mention this, anything much more than that, especially move below the recent lows, quite bearish. It could open up a big wave of selling. And the big levels on ES and SPY, you can see these reaction highs from back here about the September 9th or so, another one around September 16th, and that's comparable to QQQ. So SPY never retraced as much as QQQ. You get a correction, everybody jumps in and buys their beloved FANG stocks. So those are the reaction highs, like I was saying, on NQ. And so where I'm going with that, I think a solid break, if they can clearly put that level in the rear view mirror, that's going to be quite bullish, because this whole thing, we've been kind of basing in this range right here, especially in between here and here. So that's it. That's kind of, to me, bullish, solid break above there, bearish, solid break down below the bottom of my minimum pullback target zone, and then quite bearish, obviously, if we took out these recent lows. Okay, and a quick update on coffee. I posted that one as liking coffee last few days here, and this is I'm zoomed out to a 2-year daily chart, and you can see this is a resistance or support zone. I should have labeled it as such. These two lines in close proximity. Lots of reactions on either the top or the bottom there, and that's what gives me that support zone. So you had a brief period, a little whipsaw through there, but that set up this move we caught, on our last official long trade. We were long right there at the bottom after the breakout, because we had bullish divergence here, positive divergence, and it proved to be, like I often say, fewer things in trading and investing are more bullish than a failed breakdown. So, bears saw what they want to see, a break below support in coffee, but then the recovery, once it recovered, it was a quick move up. Here's my doctor. Let me pause this video. Okay, I'm sorry, I had to take that call. That was actually the office. Got a telehealth call scheduled for 3:20 today. All right, let's see here. So you had the support zone, little brief dip below, and that's where we're at now. We're back to the top of the zone. If you just go back in time and look at all, I'm boxing it in, I'm going with the drawing tool. Look at how many times we hit that level and bounce. Again, sometimes you go to the bottom of the zone. And then up top, we have a resistance zone there. Same thing. You had quite a few reactions up to the top of that level with one whipsaw move above it right there. Other than that, there's plenty of reactions on the top or the bottom of that zone. So the thing I love about coffee, I mean, you're rarely ever bored. You're hardly ever stuck in a dead money sideways trade. Coffee's a trendy little sucker. It's either going up or down. And you look at these ranges, from top to bottom, that range is 25%. And so if you catch these trends, I mean, you're talking a good part of the 25% run in a matter of usually just weeks, no more than a couple months. And so that's where we're at. I want to point out we're at the top of the zone there. And now I flip back over to that 2-hour chart. If I've referred to this as an hourly chart recently, my apologies. It's a 2-hour chart. Quite often I'll work off the 60-minute charts to kind of hone down entries and exits. And again, this is so every candlestick is 120 minutes of trading instead of 60 minutes. And mentioned recently we were at pretty good support there, and that roughly aligns with that long-term support. Maybe it's a little bit lower, and we took it out, but you can see a reversal right back above. So to me, that's quite bullish, because that's in this market, you almost have to bank on these false breakdowns. It's the algos. Back in the old days, it was the market makers that would manipulate stock, play a game, try to pull a stock down below support to shake out the weekended longs, suck in some shorts, and then themselves go long, reverse it, and that gives you a bear trap. Now, who knows whether it's done by the algos, but all I know is that these whipsaws are more than common, and that's why I always talk about having to stop somewhat below, especially depending on how far you're targeting. So As of now, that's what happens. We can't say for sure that we're going to rocket up from here, but I can say as of now, we recovered that 108.60 level right there, and we did it with this positive divergence still very much intact. So last time that I highlighted bullish divergence on this time frame was all the way back here, and again, that was a trade we milked a good part of, and then that ended, as pointed out at the time, with negative divergence and a big bearish rising wedge. So that's it. Watch, rinse, repeat type stuff. So far, so good. Now at this point, since we've already whipped down below there, much prefer not to see another move down, especially a move there. So that's where I think an objective stop is placed at this point now, slightly under that low, maybe even a little bit above that. Since we already had the whipsaw, you could certainly take a little bit tighter stop and even go long right now. I could say it's objective at this point in time. Targets remain the same. Just kind of I'm looking to maybe let this one run back up towards the top of that trading range again, and maybe even beyond. We'll see if it even starts to pan out, and then we'll go from there. And not to forget about those of you that do not trade futures, here's JO, the coffee ETN. This is, to the best of my knowledge, your best, most liquid option out there. JO is a symbol, and there it is. And you can see on the 60-minute chart, you also have the 60-minute divergence here, bullish divergence. And again, more of a looking at a reversal point. And any of these are old targets from before. But they all hold true. Again, I'm just more of the mindset, maybe set a stop below the recent lows and just trail it up to see if we can catch that next uptrend in coffee. And if it doesn't pan out like anything else, let it go and move on to the next one. And no change or update to my outlook on silver and gold and the US dollar and the euro and all that stuff. Still looking at, we had the pullback targets hit. I had a pullback target zone here. I had actually hit the first level, had us bounce, then go down there, and that's what happened. So we hit that 93,636 level. Need to take this downtrend line out with conviction. We haven't taken it out with conviction at all. We're pretty much flirting on it, but we have that positive divergence, and if so, the dollar, that should give us another leg up in the dollar, maybe all the way up here to that 95,675 target. If so, that's going to put pressure, most likely going to put pressure on gold. So we're today, one of the headlines I read, and these are just journalists, they have to spew out whatever they can. They said dollar and gold rallies on fear, with the president having COVID. Well, and that's true. Sometimes a dollar and gold will rally together, but if you get a sizable rally in the dollar, again, that's most likely going to give a headwind to gold. So there's DX, dollar futures, same thing. If you watch euro did break down below that small bearish rising wedge after hitting the top of my bounce target zone there. Hasn't really started moving down strong lately or hard, but again, these pretty big sharp divergences in place tell me that we could get another leg down here, and that should be net bearish for gold and silver, which I'll get to now. Let's do gold first. Gold uptrend line, couple whips below. It ran into and hit my 1911 bounce target. That's what I had from this bullish falling wedge breakout here, breakout back test, and so that's it. That bounce target was hit, and I'm leaning towards another leg down in gold soon. They continue up. These are other potential targets if you're bullish on gold. These things go either way. Maybe we don't get the breakouts. Maybe the dollar rallies, and maybe gold rallies too for those reasons. Everybody's afraid, but like I said, I'm leaning that way now. And on silver, same thing. Let me find silver futures for you. We have not broken the trend line yet, so I'm watching for solid, convincing breaks below all these trend lines that I just covered in the dollar, euro, gold, and silver. And there it is on silver. And so I think that brings another wave of selling. We don't yet have a divergent high. Silver may still want to come up and hit my that target there, potential target 24,833. And if it does, and we can get a little bit of, even if we get there, I'm sorry, we don't have to get above it. I'm drawing a bearish rising wedge. We'll have negative divergence, and that could set the stage for then a breakdown in silver. So we're at support. Like I like to say, support is support until unless broken. So we could bounce here, put in that divergent high, or we could break it. And so if you want to play it safe, you wait till the support level breaks. And if you want to really play it safe, you want to see those trend lines in both gold, silver, as well as the euro and the US dollar all break as well. And crude broke down. I've covered this quite a bit recently from that symmetrical triangle, which I said would probably put pressure on those coal stocks, which it did since the breakdown. But a lot of those coal stocks, I'll probably have to cover them in a separate video because there's so many, and then this video will go forever. But I did add a support level for crude right here, about 37.16, because there were enough reactions. Before I told you I really didn't have many, and of course you have that reaction low to contend with as well. But what I had said before is that most likely a break above or below that symmetrical triangle pattern would determine the next tradable trend in gold. I'm sorry, in crude, and that's when we were inside of it, and that's exactly what happened. A beautiful technical analysis right there. Breakdown, back test of both trend lines at once. There's the apex of those trend lines where they cross, or the apex of the triangle, I should say, and then boom, boom, boom. So, like I said, I didn't catch that one. Wish I did, but it played out very well. I haven't been really in front of the computer as much as I normally am lately. Look at one more thing for you. No, that's it. I'll just run through the coal stocks really fast. There's about a dozen or so of them that I've been highlighting. And again, I did an update a week or so ago, and I said a lot of these guys had run into some of these uppermost targets like HCC, since a breakout, big rallies. We're talking, double digits, 20, 30% or more on a lot of these. And so that coupled with the, recent weakness in crude, but more so the fact these guys got very overbought, hit resistance. But I'm liking what I'm seeing right now, and that is a lot of these are pulling back towards support. Here's trendline support. We're right on it right now. Looks like an intraday break on HCC with price support just below. So this could be a corrective wave, and it looks to me as that it probably is. And so these they're aggressive little trades, but you could go long there with stops somewhat below for the next leg up to my maximum targets, because most of them have not hit my max targets yet. Arch Coal or Arch Resources, same thing. Beautiful charts, and they played out very well so far. We certainly made good money on these since the breakout back test. Took out the $35 level, ran up, hit that 50.63 target with a brief momentum fueled overshoot, pulled back right to the $41 level, which was a target before, very well defined, and bounced. Look at that. We hit it, held there yesterday, and we're rallying today, moving back up. So again, story is the same. You get a uptrend, you buy pullbacks to support, and you can put your stops a little bit below there. And so we've already hit that 50.63 target. So if we can get some upside momentum, then I think the next targets, which are my final targets, that downtrend line, and ultimately if we can keep going about that $69 level on Arch, ARCH. And, from here where we're at right now, if hit. I'm not saying we're going to hit it. I can't guarantee anything, but that'd be about another 50% rally on top of the, since the breakout, it already rallied about 62. ARLP, this one's failure to launch. We're waiting for breakout and still building divergences down here, really around those previous reaction lows. So nothing exciting there, but these are the targets. And again, the sector can continue to get some upside momentum, especially those that have already broken out and started to run. If they can start their next leg up, it'll probably bring some of these laggards up with them. BTU, this one was nice, until reversing a little shy of that a little bit shy of the 441 target. Pretty hard pullback in BTU, but big divergences continue to build. So if it can reverse here, great. If it can't, that one again, if you were trailing it long, you probably trailed stops. You probably already got stopped out if you didn't, take profits up near that target level. But need to see it get back above 252. That's bottom line. If it can do that, bullish, because that's a pretty good support level, and also the trend line, they might come in together around the same time. So that's what we need to see, a solid recovery back above 252 as a potential buy signal, and continued bullish price action in the sector as well. Not just one of these stocks. You need to see the majority of these breaking out and moving to confirm the trade in this sector. SXC, back to trendline support. So watch, rinse, repeat. You've had numerous occasions to buy at this trend line. It's in an uptrend. That's it. Stop a little, somewhat below. No lower than that $3 level, or a little below that, because that's price support. But the safe bets will stop a little bit above this trend line and swing up to the next targets. NRP, this one broke out. There it is, trend line breakout, ran into that first resistance level, 1194, where it's been consolidating since. If we can get another leg up here in the sector, great, and that's your next target there, 1492. If not, since we've been consolidating there, you might want to keep stops tight, somewhat below that recent lows, about 1160 or so, because if we take another leg down, you probably come all the way back to back test the trend line. That wouldn't be a fun ride. You could add back to it there, but again, I want to see these guys start to rally now after the correction that we've had. So this one, a break above the recent highs, that should do the trick. 1240, we'll call it 1250 to open the door for there. And again, you want to see some of the others breaking out as well. CTRA, still looks good. Breakout here, it's been moving higher, rallied, hit that 942 target, was very overbought, extremely overbought when it did. Nothing goes straight up forever. Looks like a correction back a little bit above that 660 target, which should now act as support, and would be our next target up there, 1411. METC, it's been solid. This one, even though we've had corrections in some of the others, this was the inverse head and shoulders pattern, and it's been moving up and just came almost to that 387 target today. We're a hair shy of it now. Again, you want to you take profits if that is your target, if you're only targeting 387, or at least for a partial position. We hit a high today of 380. Close enough. Maybe you might, again, we already came that close. I think it'll hit it. The momentum is there, and if we can get momentum in the other stocks too, if we can take out 387, we'll call it 390. There's your next buy signal. Open the door to that final target up there, just under $5. NC hasn't broken out yet. We're waiting for a break above the downtrend line, bullish falling wedge. If it does, these are your targets. Again, these have all been covered in previous videos. Here's another one, failure to launch yet, or no breakout. It's just building divergence, but we need to break the 597, we'll call it $6 level to be safe, and the downtrend line to open the door to these two targets there, 768 and 993. CCR hasn't broken out. So that's the story on some of these. It's not a broad-based rally. Not all of this coal stocks are running, but a lot of them have had some nice runs, the majority. But we need to see more breakouts in some of these other ones to give a buy signal. In other words, there's no reason to buy CCR because it hasn't broken out. It's been in a downtrend. And that's it. These are low price guys. Let's just wrap it up here. Oh, there's a sector as a whole pulling back to downtrend. Look, it's back testing the downtrend line right now, and that 195.22 support. IX 1050 on TC 2000 or freestockcharts.com. Either of those charting platforms still use this symbol for the coal sector, which contains those stocks that I just covered. Okay, we'll wrap it up here. Let me get it out to you guys, and I'm gonna be out this afternoon. So if anything big happens by the close, I'll do a weekend wrap update, and if not, we'll pick it up on Monday. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed.